all blockchains into a single internet of contracts. So similarly to how the internet we all know and use is made possible by something called TCP/IP, which is a messaging and communication system that connects all the different internets of the world into one internet. You can view different blockchains as separate internets that need to get connected into one internet of contracts. And CCIP does that for both bank chains and public chains. And in connecting the bank chains and the public chains, and then connecting them together, you basically get a huge amount of value flowing from the banks into the public blockchain world, which is why I feel that the value of our industry can rapidly increase and easily go well past 10 trillion based on all the value and assets that banks are putting on chain. I think that the amount of clarity that we get next will determine whether large institutions put even larger amounts of value in. I think that this is all a side effect of FTX, and FTX started out trying to lobby and gradually improve the regulatory landscape for crypto startups by lobbying with tens of millions of dollars. Unfortunately, their failure led to the opposite reaction of a very adversarial regulatory environment. But nonetheless, that even adversarial regulatory environment is now accelerating the rate at which you're getting clarity. And I think that clarity, the more you get of it, the more that large banks and institutions become comfortable with sending large amounts of value into the blockchain system. And then with that clarity, they look for technical means to do it, which is what we work on with CCIP and the ability for banks to easily put large amounts of value into their own bank chains and then public chains. And so generally speaking, just the acceleration of clarity is in and of itself good. The decision is very positive, but the fact that there's more and more clarity so that large value and asset holders can make decisions about putting their value into the blockchain ecosystem is already a big. I think this will make some institutions on the fringes more likely to move. I don't think this will necessarily make all the largest banks or the most conservative asset managers move. But the thing that is making them move is the demand from their clients, from their customer base. So their customer base is continuing to demand access to crypto assets and even more advanced assets like real-world asset tokens. And that is really continuing to drive their adoption, regardless of whether it's a crypto up market or a crypto down market. And that's the first time that I've seen that in the many years that I've been in this industry since 2010. Usually banks coincide their interest with whether the crypto market is up or down. Now, for the first time, I'm actually seeing banks continue to invest in large technology projects like making their own bank chains, connecting those chains with CCIP, and doing other important things like issuing real-world asset tokens, because the client-side demand is still there. So I think what this will do is it'll make it more likely that there's more client-side demand, which will have a delayed effect, but it will drive banks to invest even more in blockchains because the clients will now be more comfortable with getting crypto assets, which fundamentally has been driving the banks to do more.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we have Chainlink's co-founder Sergey talking about the NWO's all-seeing eye. And guys, you know I told you this from the beginning. Now we have Chainlink bringing it all together. And we know when you attach these CBDs and stable coins, not only are the NWO able to see every single transaction, then they'll be able to tell you what, where, and when and how to buy. You have 3 to 6 months to spend it or poof is gone, or even block some of your transactions because the money is going to be programmable. And guys, we keep hearing about this $10 trillion. Guys, we know it's going to be hundreds and hundreds of trillions of dollars sitting on blockchain. We know how big the derivatives market is. But putting it on blockchain and then tokenizing the whole world, nothing is going to be real. And remember, the Crypto Teacher told you. Now, guys, I put this in here because this is textbook Hegelian dialectic. We have Mackenzie, an actor for some reason, is writing books about crypto in the industry. When we clearly see All the big banks and corporations have been funding crypto from the beginning. They're just now coming behind the curtain, and we know this. And we can clearly see Bitcoin and crypto are the future, and then we know why it's the future. It's for the fourth industrial revolution, where the robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. And we know McKenzie is not going to talk about the machine takeover. The only thing he wants to talk about is the puppets, because we know he's an NWO puppet. And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
That's your biggest concern with it, the marketplace and how.
Well, my biggest concern is regular people who've lost a lot of money. 40 to 50 million Americans invested in cryptocurrency. Most of them have lost money. Cryptocurrency, the market, closely resembles a Ponzi scheme or multi-level marketing scheme. And studies have shown that in MLMs, 99% of people lose. And the 1% benefits. In crypto, it would be the exchange owners, it would be the VC firms, it would be the people that issue the coins.
Would it be fixed if the regulatory structure were different, if the SEC or the CFTC or Congress laid rules to say which one of them was supposed to be in charge?
That would definitely help.
You think it could
Crypto's
be
benefited
fixed?
enormously from the gray area between how we classify securities and commodities. Bitcoin was classified as a commodity in 2014, I believe, because of a strict reading of the CEA, the Commodity Exchange Act of 1936, which, the futures are being traded of Bitcoin, and therefore you could classify it as a commodity because it had not been classified.
How much of your issue is around Bitcoin versus the other currencies? Because I could even make an argument that the other currencies are even more precarious, if you will, than where Bitcoin really is.
Well, that's certainly true. I mean, even worse is probably how I would say it. I mean, at least with Bitcoin, theoretically, the number is limited, right? There are only 21 million Bitcoin that can ever be mined. Bitcoiners usually make a conflation there. They confuse limited supply with scarcity. Those are not the same things, as anyone with a degree in economics knows. Scarcity only occurs when demand exceeds supply at the price of zero. So something can be limited in supply and scarce because there's demand for it, or it can be limited in supply but not scarce.
Okay, you should talk to this gentleman over here, Mr. Joe.
No,
because
we are
because Joe likes Bitcoin.
I do,
okay.
but I bought it at 4,000, and at the time said at the next halving, is it possible to go to 50 or 55? And it went from 4 to 62. So I had a much different experience than you. Sold most of it at 50. I guess I didn't have a lot in it.
No, but I read money, and I'm not.
No. And we have Tom Lee on earlier he's great, smart guy, stock analyst, thinks Bitcoin's going to 200,000. So we have, Kathy Wood, BlackRock wants to have an ETF, Fidelity, Charles Schwab, Paul Tudor Jones, Stan Druckenmiller.
Sure.
And just across the board. It didn't take me long to understand how the unbanked could benefit from this. And I also understand the distributed ledgers, and I understand it was only, you say you did a deep dive. It only took me about 20 pages of the Bitcoin Standard to understand that this was probably something that, do you think all these firms are going to have egg on their face?
So the democratized, decentralized future of money is brought to you by BlackRock?
I don't know. Maybe. They may. I mean, if they think it's gold, if they think it's,
that's why I was
digital gold.
Right, exactly, and that's why I was explaining the difference between
I heard that, but
and scarcity.
A lot of smart people are fooled by it. You think it's going to zero eventually?
No, that's like I mean, look.
Where do you think it's going?
Story. I can't predict the future any more than anyone else, but I would say this.
You think it's going lower?
Yes.
Okay. Do you think eventually there will not be something called Bitcoin?
It's a story. It'll last as long as people believe in it.
Okay.
But that's what I'm with him in that regard. It is to the extent that gold is a story of sorts.
No, I think it's a real. The 6 or 7 characteristics that gold have are all manifested.
But
I
think that maybe the most important part of what you've laid out is it doesn't matter if you believe in Bitcoin or any of these or not. It's the exchanges.
Yeah,
if the exchanges are run by complete fraudsters and Ponzi schemes, you're hosed either way.
Right.
Exactly. Great point.
But if you bought any pandemic darling, you lost the same amount as you lost in Bitcoin.
No.
Yeah, you did. Zoom, Netflix was 700, it went to 200. The same percentage losses are across the board in any of the stock market. Look at the high and lows on any of the Meta.
Right.
Just was at 80. It's back to 300. It had already made the round trip. So the percentage losses aren't, even with blue chip companies, you see 50% down.
FTX claimed 1.2 million retail traders in the United States alone. Those people can't get their money out. Celsius claimed 1 million.
Now you're talking about the FTX and you're talking about Binance. You're not talking about the underlying asset.
Yeah, but that's
But
what
the
he started
underlying
with.
asset
He
is
started
traded
with.
through the exchanges.
No, I understand, but you can you don't need to trade Bitcoin. You have your own wallet and just
Yeah,
keep
but that's
it.
not how it works. People trade it through the exchanges. That's
And I think it's
Can,
fair to
but-
be concerned about the people who got ripped off by those exchanges.
Yeah, I mean,
Lost.
look, all due
Definitely,
respect-
but you don't blame it on Bitcoin. You blame it on the exchanges.
on Satoshi Nakamoto. Look, I'm sorry. I'm not trying to be glib here. I've spent 2 years investigating this industry. I've interviewed Sam Bankman-Fried, now indicted for fraud.
Right.
I interviewed Alex Mashinsky, who was arrested last week and indicted for fraud. I've written articles about Binance, the biggest exchange in the crypto industry by a country mile. I have done my homework. If people disagree with me, read my book. Feel free.
But that's like
what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Cryptoteacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.